Okay, we are diving straight into stock alert, NVTS break support. This is all about Navitas Semiconductor, NVTS. It closed down hard at 7:55 after some pretty tough news.
The Q4 guidance downgrade and getting out of the mobile market.
Exactly. So the whole trade idea is built around this critical test of the $7.50 support level for tomorrow.
Yeah, this is a classic setup. Fundamental news, forcing a technical question. So let's get into it. My first thought goes to the targets in the bearish case, the $7.30 and $7.00.
Okay.
So while the material clearly identifies the catalysts, that guidance downgrade and the mobile exit, I feel the analysis could really strengthen the link between those drivers and the technical targets.
Right, the why behind those specific numbers.
Exactly. The weakness here is that the breakdown at $7.50 is treated as, mainly a psychological event. But it doesn't really quantify why $7.30 or $7 are the right levels for news this severe.
They just feel like convenient round numbers.
They do. They feel a bit arbitrary. So the suggestion is to integrate some deeper analysis. Maybe pull up a volume profile to justify where the next floor really is.
I see.
Or you could even try to articulate what kind of percentage move the market usually prices in for this magnitude of news.
Okay, so give me a concrete example of that.
Sure. So instead of just saying, we're targeting $7, you could demonstrate how that specific level lines up with a significant historical volume shelf.
A point where big money stepped in before.
Precisely. Or you could quantify it and say something like, to fully price in the strategic exit, the stock needs to drop another X%, which puts us right at the $7 level. It just makes the targets feel earned, not just picked.
That makes a lot of sense. You're connecting the fundamental story to the technical map.
Yeah.
But even if those targets are perfectly justified, you still have to survive the open. And that's the real killer for intraday traders here.
Oh, definitely.
The material correctly flags the high volatility expected between 9:30 and 10 AM EST, but I think the risk management framework needs to be adapted more explicitly for that chaos.
The trading Thunderdome, yeah.
Right. So looking at scenario A, the short with a stop at 760, or scenario B, the long with a stop below 740, both rely on these fixed price points.
And those can get clipped so easily.
So easily. Just rapid, non-directional whipsaws can take you out. The weakness is that fixed stops ignore time as a variable, and in that first half hour, time is everything.
It's maybe the most important variable.
So the suggestion is to bring in time-based rules or maybe some dynamic position sizing to navigate that initial noise.
So what would that actually look like in practice?
Well, for example, you could establish the entry conditions, but maybe you wait until 10 a.m. to deploy your full position size.
Let the dust settle?
Let the dust settle, let it shake out the weak hands. Or an alternative could be to specify that if the stock fails to decisively break below $750 within, say, the first 20 minutes, you automatically cut the trade or reduce size, no matter where your price stop is.
I like that. You're using time as your stop loss, not just price.
Exactly. You identified the highest risk variable, time, so your solution needs to be time-based.
Yeah, because relying on fixed price stops in that window is often it feels like you're donating money to the market makers. They hunt those levels.
They do.
And yeah, maybe you miss the first few cents of the move by waiting until 10, but the trade-off in avoiding a bad stop makes the whole setup just exponentially cleaner.
So, to wrap this up, the core actionable feedback for this NVTS setup is really twofold. First, turn those psychological targets into structural ones. Justify the $7.30 and $7 levels by connecting the fundamental news directly to, historical volume or pricing data.
Right. Make the targets mean something. And second, solve for the noise. Adjust your risk, adjust your sizing to specifically handle that 9:30 to 10 a.m. window. Move toward time-based rules to protect your capital.
Implement those two changes, justifying the drop and beating the noise, and this becomes a significantly more robust, more professional setup.
Absolutely.
Please refine the analysis and send it back to us. We'd love to take another look.